Well, it is time once again to talk about what's in your wallet. We're talking about a checkup on your finances before we get to the end of the year. Things you should be doing right now to cut some costs on you, and that includes insurance. Stewart Welch from the Welch Group joins us this morning to talk about that. We've looked at financing, investments, and taxes. Now we're talking about insurance and how we can save money.
And this is your series. You're the one that
I did come up with this idea.
So it's been a great idea.
Selfishly, yes.
It's been a great idea. So we're talking about insurance, lots of ways to save money, hundreds, perhaps thousands of dollars. Start with homeowners and auto.
Okay.
So if you have a lower deductible plan, like $100 or $250 or $500, and you raise that deductible to say $1,000 or $2,500, you can easily cut your premiums 10, 20% or more.
Now immediately somebody's going to say, well, man, what if something happens though? Then I'm going to be out that money.
So you work out your break even. Your break even's probably 3 to 4 years, and if you're turning in claims every 3 to 4 years, you're going to be in trouble with your insurance company. So this is a good plan.
Okay, so yeah, I guess you find that most people don't make claims that often, and therefore the lower deductible doesn't make sense.
Typical claims once every 20 years, so it doesn't happen very often. So much smarter to have a higher deductible and save that difference. Put it in like an escrow account.
All right.
Disability income insurance. This is particularly around professionals, whether you're a lawyer, attorney, a physician, an engineer. They'll have personal disability income with a private company, and if they change to group, they can typically cut their premiums by 2/3. So it's a really big number.
Okay.
So you want to check on that.
All right, what about life insurance?
Life insurance. So life insurance, if you have cash value life insurance, whole life, universal, variable life, you're probably paying somewhere around 4 times as much as you'd be paying with term insurance. So you want to take a look at it, and a lot of people say, well, I have a savings feature there. It's a lot of expenses, usually not a very good investment. Consider going to term. If you have term insurance, maybe you can get term insurance cheaper. So maybe you bought it when you're a smoker, now you're a non-smoker, it can cut your premiums by half. Or a lot of times we'll find people in their 50s and 60s still have insurance and they no longer need it. Their kids are grown. So those are 3 areas which you can really cut that.
And then we talked about for annuities, and I know some people who they swear by them, but I know for the financial part of it, maybe it's not worth it, the risk.
So in general, annuities are not a good deal. So if you have an annuity, just know, I don't have a dog in this fight. They're generally not good, and the reason is they're heavily laden with upfront and ongoing commissions. A lot of expenses associated with them. So generally we would say don't do an annuity. If you have an annuity, you might want to check with somebody and find out, does this really make sense for me? All
right, Stewart Welch from the Welch Group, some good information here, saving you money on your insurance, not affiliated at all with the Gecko. So that's
right.
good. Appreciate
Thank you, Mike.
Thank you, Stewart.